I think the most important thing about silver is being patient. And I think once silver breaks through $50, which is like the line in the sand, we could see, yeah, fireworks in silver. They don't want the public to get involved in silver because it's kind of in our DNA, and loads of words, words for money in different languages is silver. Like in French, it's argent. In Spanish, it's plata. And even the word dollar comes from the Spanish mil dollar, which came from the Joachim's Thaler silver coin. So I think that's why they're concerned. And a lot of times they also want to maintain the market volatile because that puts a lot of investors off.
A war on silver has been raging for centuries, and according to Mario Innecco, it's about to end. The existence of silver as money is a historical fact that has long been a threat to central banks. Bullion banks have used tactics to keep prices volatile and discourage public investment. But with fiat currencies reaching their breaking point, Mario warns that the bank's own game is almost up. Renowned technical analyst Mario Innecco has spent decades watching bankers manipulate the futures market, so when silver spiked to $30 in 2021, he wasn't convinced. However, after years of struggling at that price point, he now believes the technical picture for silver is finally looking bullish. HSBC has lifted its silver price forecasts for 2025, 2026, and 2027, citing strong support from high gold prices and safe haven demand in the face of geopolitical and economic uncertainty. On the fundamental side, a 5-year silver deficit tells the real story. With nations like China and India needing silver for infrastructure, Mario Innecco calls it one of the most undervalued assets on the planet. Increased Chinese demand has significant repercussions for international silver markets. Fluctuations can influence silver prices in demand in China. Moreover, mining companies worldwide are increasingly taking Chinese demand into account when making investment decisions. China is setting the pace for the dance. With prices still below historical highs, Mario advises being patient. Once silver breaks the key $50 line, he predicts fireworks and a rush to mining stocks, though he prefers the physical metal. The silver market is a rigged game, and Mario Innecco explains exactly how it works. He says the market is so shallow that it's easy for bullion banks to push prices around with large trades. However, the kicker is when regulators do act, as with the Hunt brothers in 1980, it's not to protect you, the investor. It's to protect the banks. Before we dive into Mario Innecco's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
If you remember well, back in 2021, there was the silver squeeze and silver traded up to 30. And a lot of people were excited about that. They thought it was going to break out. I was a little bit skeptical because I've seen for over 20 years how the futures market can be kind of manipulated by the bankers. So yeah, we've been waiting a long time for silver to finally break above 30, and I think it looks really bullish. So we had resistance around 35 a few months ago that we broke, and that's the technical picture. And right now it looks like 40 is the next target, and yeah, they're trying hard to keep it from going towards that level, but I think eventually it will. On the fundamental basis, I think that the fact that we have a silver deficit that has been running for like 5 years, there's not enough silver being mined and produced to match demand. That's very bullish, and the fact that countries like China and India need a lot of silver, not just for investment purpose, but also for building their infrastructure. Yeah, it makes silver, in my opinion, probably one of the most undervalued assets on the planet. If you think of where silver got in 1980 and even 2011, we're still not even there. Yeah, so I think the most important thing about silver is being patient. And I think patient will be rewarded. And once silver breaks through $50, which is like the line in the sand, we could see yeah, fireworks in silver. And also the silver miners. I think they're looking really good as well, even though I focus on having physical silver as well. But silver miners, I think, are going to be a really good way to be exposed to this move. And yeah, they're showing signs of life. Who they are, I guess it's the bullion banks, and they work for the central banks basically. I think the central banks are involved, even though they don't hold much silver. And I think they're they don't like silver up so much because if you look at historically, silver, even up until the early 70s in some European countries, they're still using silver as money, coinage. And in the US until 1964, uh, Switzerland till 1967, I think. In the UK, we got off silver a bit earlier. It was 1947 because the UK was bankrupted really by two major wars. But yeah, and I think they don't want the public to get involved in silver because it's kind of in our DNA and loads of words, well, words for money in different languages is silver. Like in French, it's argent. In Spanish, it's plata, and even the word dollar comes from the Spanish mil dollar, which came from the Joachim's Thaler silver coin. They also want to maintain the market volatile because that puts a lot of investors off. They want to make it so that it's just like a volatile commodity, and that was one of the strategies that they basically installed when they let's say when the U.S. allowed gold to be legal again on 1st of January 1975. There's a WikiLeaks document uh, where the Treasury and the Department of State communicate with bullion dealers in London, and they say, yes, it's good that we're going to have a futures market for gold because it's going to keep the markets very volatile, and it's going to keep the public from demanding physical gold. And it's the same thing for silver. And I don't think they're going to make it, though, because the debt situation is so out of control that I don't think the dollar or all the other fiat currencies have much time left. And I think they know it, these bankers, even though Ben Bernanke seemed to play dumb when asked what gold was by Ron Paul. He said it was an addition. So that's why they try to keep things like under wraps, under control. But the bankers might, you can't count them out. They might even reverse their short positions and go long silver. Who knows? I worked in the futures market for like 20 years, uh, mostly government bonds and interest rates, but I got involved in, they can move the price quite sharply, and especially in silver, because silver is not really a very deep contract, as deep as gold and other futures markets. So these guys know the price levels, the supports and resistances. And yeah, when the market gets too frothy, they'll come in and sell like 1,000 futures of silver, which is big. Prior to let's say the early 2000s, it was a bit more difficult to manipulate the futures market because all the trading was done on the floor, and people could see who was doing what. You could see if JP Morgan or the broker that JP Morgan used was selling or not. But uh, the market went electronic basically by 2004 or 5 or thereabouts, futures were all traded electronic. So they can hide behind that because when you sell or buy on the screen, it doesn't show who's doing it. And the other thing they've done and they've been fined for doing is spoofing the market. That means you put a huge offer on the screen and then you pull it. But the reason you put the huge offer is to scare people off from buying, and it actually might trigger some selling. Um, yeah, the people in the bullion banks, they say that they don't really go short. It's all hedging, but I think yeah, I don't buy that, and I think a lot of times they also front run their big clients. If a big hedge fund comes and tells a bullion bank, I want to sell 1,000 silver contracts, they'll sell as well. And I mean, when I work as a futures broker, I always tried to work the orders so I wouldn't move the market in a prejudicial manner for my client. And that means, if he gave me a big order to sell something, I would work it. I wouldn't try to smash the price, but that they do, and they seem, back in 2021, that's what they did when we got up to 30. And even the head of the CFTC came out and said, well, we had to tamp down the demand, and yeah, they basically smashed the futures at the 30 level. And yeah, I mean, it kept silver from rising for like 3, 4 years, really definitively. So that's what happens, and it happens in gold as well. It happens in other markets too.
Since Nixon closed the gold window 54 years ago, the fiat system has fueled an explosion of debt and financialization. While a digital currency reset is coming, Mario Innecco argues that any lasting system will need to be backed by gold or silver. That's why BRICS nations, led by Russia and China, have been stockpiling gold since 2022, not to attack the US, but to trade independently in a post-dollar world. The result could be a multipolar system that, ironically, benefits the US by easing the burdens of being a reserve currency. As the United States grapples with escalating economic challenges, the BRICS alliance is emerging as a significant player, showcasing a range of currency alternatives that serve both economic and national security interests. This trend is exemplified by China's decision to conduct nearly 50% of its international trade outside the dollar system, reflecting a broader global movement in which approximately 80 countries are adopting local currency policies for bilateral trade. With approximately 5,700 tons of gold, representing 16% of global reserves, Brazil, Russia, India, China, and South Africa possess the necessary backing to establish their proposed unit currency as a viable commodity-based alternative to fiat currencies. Within this context, there has been a resurgence of discussion surrounding the potential reintroduction of gold-backed monetary standards. Let's get back to the interview.
I mean that, the system is long in the tooth. Friday is the 54th anniversary of when Nixon uh, closed the gold window or suspended the convertibility of the dollar into gold temporarily. And it's been a massive increase in debt, financialization, derivatives. It's all mushroomed so much that I think these guys know as well that, you can't keep this going forever. And I think they do want to bring in some kind of digital currency. The Europeans are more into the CBDC. In the US, it seems to be more through the private sector and crypto. And I think crypto has been kind of an experiment. It's been portrayed as a grassroots movement to fight the bankers actually in their system. But now all the bankers and even the Trump administration, they're getting involved. So it's been hijacked, or maybe it was created by them uh, to use it as a solution to the collapse of fiat. Uh, yeah, and I think they do need gold and silver if they want to get back up and running, because if you just bring in fiat, not fiat, but if you bring in digital currency or CBDC with no backing, with just the same old, let's say, government debt backing, I don't think that will work. So they will have to resort to some kind of commodity money. And I think the BRICS countries, especially Russia, China, and other countries, they've been buying a lot of gold since 2022, and because they see the writing on the wall. I mean, I think BRICS is a response to the uh, the West's like imposition of let's say sanctions, tariffs, and yeah, to the control of the monetary system by the U.S. through the petrodollar, and also the EU with their sanctions, and especially with what happened after 22 in Russia. And I think I don't really think they're pushing, they might have some kind of currency. I don't think they will, though, because it's such a, they have such different cultures within the BRICS, different kinds of economy. I think what will happen is that they will have their own trading system where there will be a common reserve that they will use to settle trade at the end of the year or whenever. And by that, I mean, if Brazil has a surplus with China, uh, and Brazil's holding yuan, they might want to convert some of that into gold, or they'll just keep the yuan and vice versa. And it's just like cutting out the middleman. They want to cut out the West. And I don't think they're, I mean, politicians, especially President Trump now, they've been quite aggressive in terms of what they say about BRICS. They say BRICS is anti-American, anti-dollar, but I don't think they are. They just want to be more independent and not have to be at the mercy of someone else's currency, especially if you're dealing with someone, let's say Brazil and China again. Why do you need to use dollars? Why can't you use the Brazilian or the Chinese currency? That's how I see it. And I think gold is going to be a very important part of that, because you can't really trust the BRICS fiat currencies either. I mean, look at Brazil, where I'm originally from. I think in the 70s and 80s, we had 4 or 5 new currencies. So it can only work if you go back to gold, because the dollar worked for a long time, because up until 1971, it was as good as gold. So I think that's what BRICS is all about. And I see going forward the whole world being kind of like BRICS. It's going to be a more of a multipolar world, as they say it. And I think it's even better for the US and the dollar, because to be the major reserve currency has a lot of advantages, but it has a lot of disadvantages as well, as we've seen in the last few decades. The country's up to here in debt, huge deficits. The middle class has been eviscerated. It's been deindustrialized because other countries have to earn dollars. So what they've been doing is trying to sell as much stuff to the U.S. as possible to earn those dollars to function in the world. So yeah, I actually think it's a positive for the whole world, the fact that this is happening.
HSBC noted that a weaker US dollar this year, as forecast by HSBC Research, is a silver lining. At the same time, ongoing debates over Federal Reserve rate cuts and central bank policies could impact prices going forward. Understanding how the price of silver is determined is essential for any investor or market participant. When the tide finally turns, whether in silver, gold, or global currency systems, will you be on the side watching from the shore or riding the wave? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.